Let's work with an assumption. Let's work with the assumption that we are still in a bull market and that we want to find out what's the exact risk versus potential return. How much can we drop given we are in a bull market? How much can we potentially further rise if we just look at historical data? Because history doesn't necessarily repeat itself, but it often rhymes, and we can potentially get some idea when people could take profit again. Let's start off with the bull market drawdowns. So this is a chart from the recent Glassnode newsletter. It looks at the various bull markets. That's here in light gray in the background, and it's then color coded individually here on the same x-axis. And then we see here at the top how much did we actually correct from the top to the bottom historically. And we had a massive correction during the COVID crash. That was over here, minus 63%. But usually our corrections are smaller than that. Usually we are in the 30 to 40% range. I dare to ignore the very early years when Bitcoin was just a few dollars. Of course, at that time, the volatility was way higher. I believe now, going forward, seeing drawdowns of more than 40%, if we are, of course, in a bull market, is rather unlikely. So far, we've only seen a maximum drawdown of 20%. That's again for Bitcoin. Let's have a look at the same data for Ethereum. We do see slightly larger drawdowns here. The COVID crash was comparable, but we've seen very similar crashes even afterwards of above 50%. The current rally already saw a drawdown of 44%. So that would imply that still Ethereum's volatility is higher than Bitcoin's volatility. So if you are considering to lever up your position in Bitcoin and in Ethereum because you believe we are in a rally, then do this less for Bitcoin than for Ethereum. I believe that a leverage of 1.3 is still okay for Bitcoin over the long term. For Ethereum, I'm not that sure about that. It's important that you've got your own metrics to decide whether or not we are currently in a bull or in a bear market. I personally use the 120-day simple moving average for Bitcoin. This is what I have backtested. This is how I potentially exit the market. So whenever we are above that moving average, I tend to be levered long with 1.3x. But for Ethereum, I believe any kind of leverage is dangerous. Even though we have very positive news now with the Ethereum ETF approval, I still believe volatility tends to be slightly higher for ETH, so you don't want to go overboard with leverage, maybe avoid it altogether. So that's the data on Bitcoin, that's the data on Ethereum. But let's now have a look at how much people are actually in profit. And let's focus on Bitcoin for that. What we've got over here is the market value to realized value. So the market value is simply just the current price, right? Price times number of Bitcoin that are floating. The realized value is some kind of special moving average. The realized value is a value where we look at all different Bitcoins and we check on chain at what price did those Bitcoin move the last time. So we actually know the average cost base of the entire market. That's the realized value. So when the current price is above the realized price, then in aggregate people are in profit. And that could mean that people take profit at some point, right? There's more selling pressure when people are in profit than when people are in losses. And so currently people are by 225% in profit. So the market value to realized value is at 3.25. This is specifically to the long-term holders. Have a look at this green line over here. This is market value to realized value of 1. Whenever we are below this, then the long-term holders are in losses. This is perfect timing for buying very heavily into Bitcoin. And so how much more could we rise from here? Let's have a look. Let's take those tops as a reference point. Let's say we don't go beyond January of 2021. This is when we peaked out at around 10. Now we are at 3.25. So maybe there's another 3x from here. So ballpark, the most positive scenario, I believe, is at around 200K. At 200K, the air is getting really, really thin for Bitcoin. The risk to reward might not be worth it at that point, especially when you are then overexposed, right? If you're currently, say, with 20% of all of your entire net worth in Bitcoin, now Bitcoin triples again. Now more than half of your net worth is in Bitcoin. Do you really want to be with half of your net worth in Bitcoin when Bitcoin is already rallied that much and when people on average are that much in profit? Probably at that point, it does make sense to take profit. But currently, we are very far away from this. We have turned around at similar levels before, like here in summer of 2019, when subsequently we had the COVID crash. But we also saw extensions that were way higher. Now everybody is looking at the Bitcoin ETF demand, right? Is currently traditional finance buying up Bitcoin, or are they distributing? A lot of eyes are on those on-chain statistics. The question is, how much do those statistics actually matter? Let's look at this in the grand scheme of things. What we've got over here is the Bitcoin ETF flows, the net flows. So the net flows here is the dotted black line. We pretty much had only positive flows at the beginning from January to March of this year. Then we hovered around the zero line. So sometimes we had outflows, sometimes we had inflows. Now we tend to see mainly inflows again since beginning of May. Yesterday wasn't too positive though. And that was because of the outflows of the Grayscale Bitcoin Trust. So that's what we see here in red. That's the outflows out of GBTC. The reason why the net flows were positive recently since May was because there was very little outflows from GBTC. But how much do those numbers matter? The answer is in this chart. What we see here in purple, right, this small area here, what we see here in purple is the outflows from the Grayscale Bitcoin Trust. What we see here in red and in green, this oscillator, that's the long-term holder net position change. So this is when the long-term holders tend to sell. So during the massive rally over here, right, they sold into the rally, and when they massively buy in. That's over here after the drop from that rally. And we see here the Grayscale Bitcoin Trust. So yes, GBTC does matter, but what actually matters more is what the long-term holders are doing. The long-term holders have a way larger impact on the prices. And that's why I believe the market value to realized value number is so important. It's important to know how much long-term holders are in profit and how likely they are to potentially take profit. I publish videos regularly over here. Feel free to subscribe. A like would be very much appreciated as well. It does help the channel grow. I sometimes share time-sensitive information on Telegram as well. It's 100% free. Feel free to join over there. Link is down below.